Welcome to The Explainer. Today, we're going to pull back the curtain on a key financial metric that every single investor really should get a handle on. We're talking about average daily trading volume, or ADTV for short.
All right, so here's how we're going to tackle this. First, we'll cover the absolute basics. What is ADTV? Then we'll dig into why it's such a powerful tool for traders, see it in action with a pretty cool example, and wrap up by looking at some of the finer details so you know how to use it the right way.
All right, first things first, let's get right down to it. When we talk about ADTV, what exactly are we talking about? What is this thing that's supposed to be the market's pulse?
So at its core, ADTV is pretty simple. It's just the average number of shares of a stock that get traded, bought and sold, every single day. And we usually look at that over the last 20 or 30 days. And honestly, this analogy you see here, it's spot on. Think of a stock with high ADTV like a massive, bustling superhighway. You can merge on and off super easily, right? No one really notices your car. But a stock with low ADTV, that's like a deserted country road. If you try to pull on or off, believe me, everyone's going to notice, and you might just cause a backup.
Okay, so now we get what it is, but the real question is, why should you care? How does this number actually translate from just data into a real decision for a trader? Let's dive into why this matters so much.
This right here, this is where ADTV really shows its value. It's like a Swiss Army knife for traders. They use it to check out the liquidity, asking, can I actually buy or sell this thing without causing a scene? They use it for volatility analysis, because with low volume, even a small trade can send the price flying. It helps them figure out how big of a trade to make, and even if the stock is a good fit for their strategy to begin with. And of course, risk management. You've got to know you can get out when you want to get out. It's absolutely crucial.
Okay, theory is one thing, but let's see how this plays out in the real world. I want to walk you through a quick scenario. Let's imagine we're a trader at a big hedge fund, and we're looking at a potential trade in General Electric.
Now, our trader has a big problem, or rather a big responsibility. Since they work for a huge fund, they can't just throw millions of dollars around without moving the stock's price. So they have a strict rule. Any trade they make can only be a small piece, say 10%, of the average daily trading volume. This rule is their North Star for everything they're about to do.
So, our trader likes what they see in GE. The stock's at about 55.80, and they want in. They're ready to buy $1 million worth. But they don't just hit the buy button. No, they wait. They're patient. They wait for a day when trading volume is way higher than usual. Why? Because that huge volume acts like cover. It lets them slip their big order into the market without anyone noticing and without their own purchase driving the price up.
Okay, fast forward a bit. The stock has pulled back to around 51.80. Our trader sees this not as a problem, but as an opportunity. It's a chance to buy the dip. And just like before, they wait for another high-volume day to put another $1 million to work. That liquidity once again gives them a smooth entry, and even better, it lowers their average price for the whole position. Pretty smart, right? All right, now let's jump ahead about 6 months. The trade has worked out beautifully. The stock is up over 50%, trading around 84.70. It's time to cash in, and you can probably guess what they do next. They use the exact same strategy, but in reverse. They wait for a super high volume day to sell the entire position. That allows them to get out cleanly, locking in those profits without their massive sell order crashing the price.
But, and this is a big but, ADTV is not magic. It's not a crystal ball. Like any tool in a trader's toolbox, you've got to understand its nuances, what it's good for, and, just as importantly, what it can't tell you.
One common point of confusion is mixing up ADTV with something called open interest. You'll see open interest in the world of futures and options. They sound similar, but they're totally different. Remember, ADTV is all about turnover, how many shares changed hands today. Open interest is about how many contracts are still open, just sitting there, not yet settled. Both are about activity for sure, but they're measuring fundamentally different things.
So that leads us to the big question, right? The one everyone wants to know. Is ADTV some kind of crystal ball? Can you look at the volume and predict where the stock price is going to go tomorrow? And the short answer to that is absolutely not. ADTV is an amazing analytical tool, but it is not a predictive one. And here's why. A huge mistake people make is seeing a stock go up on massive volume and thinking, wow, everyone is buying. But high volume doesn't mean just buying. It means high activity. For every buyer, there's a seller. That spike could just as easily be tons of people taking profits. All volume really tells you is that interest in the stock has suddenly changed. It doesn't tell you the reason, and it certainly doesn't tell you which direction it's headed next. Okay, so we've covered what it is, how it's used, and, super important, what its limits are. So, what's the one big thing you need to walk away with?
Here's the bottom line. ADTV is an absolute cornerstone for figuring out a stock's liquidity and how much interest there is in it. It's a fantastic, versatile tool for managing your risk and planning your trades. But, and this is the part you really have to remember, it's just one tool. Relying on it alone is a recipe for disaster. It's at its most powerful when you use it with other indicators to get the full picture.
And that really brings us to this final thought here. Volume shows interest, but not intention. I love that. It means a spike in volume tells you that a stock is suddenly in the spotlight. People are paying attention. But the real work, the real analysis, is figuring out why. Whose interest is it? Is it a big institution slowly building a position, or is it a bunch of traders jumping on a news story? That's the detective work you have to do.
Thank you for watching. If you got something from this, please like the video and support the channel by clicking on the subscribe button. That really helps us. Thanks again.